Hello and welcome to this overview of greenhouse gas emissions accounting. My name is Barbara Hamill and I'm the founder of RBESG, a sustainability company in Dublin, Ireland, which helps companies establish the foundations for sustainability governance, due diligence and reporting in their organisations. This in turn empowers them to transform their impact on people, the environment and the wider economy. I put this overview together in response to a number of questions from clients as to what greenhouse gas accounting is all about. In my experience, most companies know climate change is an issue and know that they have to do something about it, but when they are actually pressed on it are unsure as to why. This overview therefore is designed to answer these questions and to hopefully provide you, if you find yourself in the same position, with that aha moment that will help you connect what you're currently doing or could be doing in your company to the wider national and international efforts currently underway to tackle climate change. It doesn't matter how insignificant you think your impact may be, as every little counts. Okay, so let's start with the basics. Climate change. What is climate change? Climate change refers to an increase in the world's mean or average atmospheric temperature, and it's caused by an increase of greenhouse gases in the atmosphere. Okay, so we all know that there are different climates in different regions of the world. Some places are hotter than others, some are colder. Some places vary in temperature depending on the season, whereas others maintain a constant temperature all year round. When all of these are looked at collectively, however, we have an average global temperature of 15 degrees Celsius or 59 degrees Fahrenheit. So while this may vary up or down by 2 degrees Celsius or 4 degrees Fahrenheit month by month, on average, the yearly global temperature remains the same. So what causes a change in temperature? The amount of greenhouse gases in the atmosphere causes the change. So some of you may recall from school or college that the nature of greenhouse gases is that they trap or absorb heat in the atmosphere, creating a natural greenhouse effect, which is essential for life on Earth. So if you look at the image in the top right-hand corner of your screen, you can see this in action. So this grey curve between the sun and the Earth depicts the greenhouse gases in the atmosphere, which effectively act as a barrier between Earth and space. So if we didn't have these greenhouse gases, the sun's rays would come in through Earth, bounce off the land and rebound straight into space, effectively rendering the Earth freezing and inhospitable to life. So the temperature would be about minus 20 degrees Celsius or minus 4 degrees Fahrenheit, and the Earth would be a wasteland. Instead, as we do have greenhouse gases that absorb the sun's rays and trap heat, we are able to survive and thrive. So what are the different greenhouse gases? Greenhouse gases include carbon dioxide, methane, nitrous oxide, fluorinated gases, and water vapour. So each of these gases have different properties which can make them more potent in terms of warming, such as methane, for example. Methane has 28 times more global warming potential than carbon dioxide over a 100-year period, or 84 times more global warming potential over a 20-year period. Methane has a much shorter atmospheric lifetime, however, in that it only lasts 12 years in the atmosphere, compared to centuries for carbon dioxide. So how are GHGs emitted? GHGs are emitted as a result of natural processes, such as the respiration and decomposition of humans, animals and plants, and through ocean release, and through anthropogenic means, such as the burning of fossil fuels, the use of nitrous oxide in agricultural fertilizers, and the production of fluorinated gases during the manufacture of aerosols and refrigeration and cooling products. Okay, so what's been happening in the last number of decades is that increased industrial and agricultural activity, land use change, which includes extensive deforestation, and an upsurge in global travel and logistics due to globalization have all resulted in unprecedented levels of greenhouse gases in the atmosphere, which has caused a rise in temperature. Okay, so the more greenhouse gases there are in the atmosphere, the hotter it becomes. Let's dig a little deeper as to why there are more greenhouse gases in the atmosphere by looking at carbon dioxide as an example. The image on your screen is the global carbon budget, which is maintained by the Global Carbon Project. Incidentally, they also maintain budgets on methane and nitrous oxide, which can be seen on their website. The global carbon budget shows us how much carbon dioxide can be emitted into the atmosphere without causing an increase in temperature. It does this by quantifying how much carbon dioxide is absorbed by Earth's natural sinks. So, if you look over into the right-hand corner of your screen, you can see that Earth has 4 main natural sinks. These are the atmosphere, the land, which includes rocks, trees, bogs and soil, the ocean, and fossils, which have until recent times remained trapped deep in the Earth's crust. What we have done to upset the natural carbon balance over the last 50 to 70 years is twofold. So firstly, we have taken the fossils in the form of gas, oil and coal reserves from deep within the Earth and released them into the atmosphere. Secondly, we have damaged or degraded Earth's sinks, which lessens their ability to absorb and store carbon dioxide. So, for example, by clearing land and cutting down trees, we've reduced the amount of carbon dioxide that can be stored by trees. By polluting and acidifying the ocean, we have impeded its ability to store carbon. So between releasing more carbon dioxide into the atmosphere and degrading our sink's ability to store it, we've exceeded our carbon budget by 2 gigatons or 2 billion tons. This means that we are emitting more than 2 billion tons of carbon a year than can be absorbed without increasing the volume of greenhouse gases in the atmosphere. If, on the other hand, we were only to emit those emissions that could be absorbed by Earth's sinks, we would remain within our budget, thus achieving net zero emissions. So, how does this increase manifest itself? How can we measure it? We measure it by assessing the volume of carbon dioxide in the atmosphere in parts per million. So parts per million means 1 part carbon dioxide to 1 million parts air. And as we can see from the title, as of May 2024, we are currently at 425.6 parts per million. If we want to compare that to the past, we turn to the Keeling curve, which you can see on your screen in front of you now. The Keeling curve is named after Charles Keeling, the scientist who started taking daily atmospheric readings of carbon dioxide in his lab in Hawaii in 1954. This practice has been continued to the present day, and today the Keeling curve is maintained by the Scripps Institution of Oceanography at UC San Diego. So this first curve on your screen shows the daily readings from the start of Charles Keeling's efforts to the present day. And as you can see, the concentration of CO2 has risen from just under 320 parts per million to its present day figure of over 425. If you look then at this second curve, which shows the concentration of CO2 in the atmosphere from 1700 to the present, you can see the concentration levels rose from about 275 parts per million in 1700 to its present day figure. And we can see that the rise really started to happen around the 1960s, 1970s timeframe, which was after World War II and after the creation of international trade agreements, which led to the globalization of agriculture and industry we see today. If we take a longer time horizon then, looking back 2,000 years, we can see that volumes remained pretty steady at just below 280 parts per million until it started to rise somewhat from the onset of the Industrial Revolution and then again rapidly from the 1960s and 70s. So again, just to emphasise the point of how much a difference we have made to emissions in the last 5 or 6 decades, we have this final graph which depicts the concentration of CO2 in the atmosphere over the last 800,000 years. And from this we can see that although there were fluctuations in carbon dioxide over this period, we never went above the 300 parts per million level. Now some of you may be thinking, I thought Keeling started his measurements in the 1950s. How do we know how much carbon dioxide was in the atmosphere this long ago? Well, we know from the ice. So by drilling ice cores and measuring the concentration of CO2 in trapped air bubbles, we can tell what the atmosphere was like hundreds of thousands of years ago. Pretty cool, eh? Anyway, this graph in particular shows how much our activity has impacted the atmosphere in what can only be described as a nanosecond in Earth's history. And while we're starting to see the results of this in terms of rapidly changing weather patterns and extreme weather events, we're really just at the brink of what is to come as a result of this nearly instantaneous and meteoric impact on Earth's biological systems that would usually only experience change at a much, much slower geological or glacial pace. Okay, so when it comes to tackling the climate change crisis, we know that we have to drastically reduce, if not eliminate, our greenhouse gas emissions, but it's actually more than that. So in explaining this concept to clients, I find it really helpful to use the bathtub analogy, as this is also a really good way to explain to people as to why COVID-19 and its subsequent global shutdown didn't resolve or improve the climate change crisis. So if we think of the climate crisis as a bath, the water running from the tap into the bath represents our ongoing emissions, while the bath water represents the existing carbon dioxide in the atmosphere, so our 425.6 parts per million. As we are already 2 gigatons over our carbon budget, we not only need to stop adding more emissions, i.e. turn off the tap, which just further compounds this budget overrun, but we also need to remove some of the carbon dioxide from the atmosphere, i.e. we need to drain the bath water. So we do this in carbon terms by increasing the ability of our sinks to store more carbon. So we plant more trees, we rehabilitate degraded land, and we clean up our waterways. Sounds easy, right? So what's the solution? How are we tackling climate change and who's driving this effort? From an international perspective, the UN is driving this effort through its Framework Convention on Climate Change, or UNFCCC, which was adopted in New York in 1992. This framework leverages international cooperation both to combat climate change by limiting average global temperature increase and to cope with the impacts of the increases in temperature that do occur. The UNFCCC bases its strategies on the scientific reports produced by the IPCC, or Intergovernmental Panel on Climate Change, and it assesses its progress on an annual basis through a Conference of Parties, or COP. So one of the most well-known of these COPs was the one held in Paris in 2015. At this COP, a set of goals were established which would strive to limit the global temperature increase to 1.5 degrees Celsius above pre-industrial levels, whilst ensuring it was kept well below 2 degrees. While the difference in the two increases may seem very small at half a degree, even a small increase in global atmospheric temperature can have a massive impact on weather systems, as we can see from the different scenarios mapped out by the IPCC in their assessment reports. The actual and predicted effects of global warming include increased temperatures, tropical cyclones, floods, droughts, hurricanes, ocean acidification, the slowing down of the Gulf Stream, an accelerated collapse of the Greenland ice sheet, changes to El Niño patterns, and activation of a number of other planetary tipping points. And so while we know what we need to do to limit or prevent these effects, you can see from the thermometer graphic here that we are not yet on course to do so. So this image has been taken from the Climate Action Tracker project, and it is really useful in depicting where we are in relation to our Paris Agreement ambitions. So as you can see, based on our existing international policies and actions, we are currently on track to hit 2.7 degrees of warming above pre-industrial levels, with the possibility of this rising to 3.4 degrees. If we meet the 2030 targets that individual countries have set for themselves through their nationally determined contributions, or NDCs, we could bring that down to 2.5 degrees warming. And if we fulfilled all of our pledges and targets, we could, in a best case scenario, keep warming to 1.8 degrees above pre-industrial levels. Given we are already at 1.3 degrees warming and have in some instances breached 1.5, we definitely have our work cut out for us. So, how does all this apply to you as a company? Well, hopefully from what you've seen so far, you realise that tackling climate change is an all-of-society endeavour. Although the UN is the ultimate driving force that has set our global targets through the Paris Agreement, each international region and country must in turn devise their own strategy to achieve these targets and must define ways to measure and assess their progress against same. The EU therefore has defined the European Green Deal, which legally binds it to reduce its greenhouse gas emissions by 55% by 2030 and to become climate neutral by 2050. Each of the EU's member states in turn must also commit to targets which enable the EU realise these commitments. Each member state does so through a national climate action plan. In addition to European-wide law and the requirement for individual national plans, the EU has also established a directive which mandates large companies to report on their emissions. This directive is the Corporate Sustainability Reporting Directive, or CSRD. Companies in scope for CSRD are legally required to quantify and report on their emissions using a set of European sustainability reporting standards. Many companies who are not in scope for CSRD are also required to report on their emissions, either because they are in the value chain of those who are in scope or because certain other stakeholders demand it. Those companies that do report on emissions are encouraged to set their targets in line with science, so by aligning to initiatives such as the Science Based Targets Initiative. And they're also recommended to follow the accounting guidance of well-established reporting standards and frameworks, such as ISO 14064 and the Greenhouse Gas Protocol Corporate Accounting and Reporting Standard. Regardless of what reporting standard you decide to use, it's important to become familiar with the different scopes of emissions that must be reported on in every standard. These are Scope 1, Scope 2, and Scope 3 emissions. The graphic used here to illustrate the different emission scopes has been taken from the Greenhouse Gas Protocol Corporate Accounting and Reporting Standard, and it's probably the most recognised and easy to understand image on the subject. In the centre of the image we have the reporting company, which relies on the upstream activities to its left to supply it with the inputs and services it needs to produce its own products and services, which in turn are then transported and used by the downstream activities to its right. This combination of upstream stakeholders and activities, company activities, and downstream stakeholders and activities represents the company's value chain and encompasses the entire scope of emissions that should be quantified. When it comes to accounting emissions, the easiest ones to quantify are Scope 1 and Scope 2 emissions, as these are within direct control of the reporting company. Scope 1 direct emissions are those emissions directly incurred by the company through the combustion of fossil fuels. So, for example, through the use of plant or industrial equipment that runs on fuel, or through company-owned vehicles that use petrol or diesel. Scope 1 emissions can also be incurred through land use change and forestry, although this normally doesn't apply to SMEs or other companies that do not own additional land beyond that which their office occupies. Scope 2 indirect emissions then refer to imported energy and electricity, which typically equates to your heating and electricity usage. Finally, Scope 3 emissions cover all of the indirect emissions that occur throughout your value chain, and thus are typically more difficult to account for. As you can see from the image on your screen, there are 15 Scope 3 categories within the Greenhouse Gas Protocol. These include emissions from purchased goods and services, capital goods, waste, business travel, transportation and distribution, the use of sold products, emissions from end-of-life treatment, and emissions from investments. As you can imagine from the range of categories included in Scope 3, even very small companies can have a lot of Scope 3 emissions, so it's really important to get a good handle on the structure of your value chain before you start tackling these. If you need help mapping out your value chain, RBESG's STS plan, which contains our detailed blueprint for sustainability transformation, shows you how to do this step by step. STS plan can be purchased directly from our website at the link shown. For those of you about to embark on your first GHG emissions accounting journey, firstly, well done, we applaud you. We then recommend the following approach. From the top, it's important to give people an overview of what you want to do and why you want to do it. This makes it easier to elicit support and to obtain buy-in, which is really important when it comes to gathering information. Please feel free to share this presentation with any and all of your stakeholders so that they too can understand the bigger picture of climate change and can get an idea of what it is you will be asking them for. Once this is done, the next step is to prepare your data requests. These can comprise internal report requests, detailed billing information, and information on business processes. and are usually elicited through specific email, online, or in-person requests. In our experience, targeted surveys or questionnaires typically work well for larger stakeholder groups, such as suppliers or staff. They can be used to query whether your suppliers account for their emissions or to ask your staff how they travel to work. The third step is to compile a data inventory and to model your emissions using the calculation guidance contained within your chosen reporting standard. This part typically requires a good handle on numbers, so dust off your Excel skills and get your calculators to the ready. Once all of your data is compiled and modelled, the next stage is to draft your findings in a report which meets the required scope of your chosen reporting standard. Each standard typically has a rigorous list of requirements, so it's important to make sure you read your chosen standard carefully. Finally, once drafted, we recommend circulating your report for review before signing this off. This can be sent to both internal and external stakeholders, and ideally should be independently verified by a third-party assurance specialist or auditor. Many people will be interested in your emissions, so the more confidence you have in these as a result of robust and critical independent review, the better. As you know, it can take years to build up your company's reputation, while it can be destroyed in seconds. Okay, that concludes this presentation on greenhouse gas emissions accounting. I hope you found it useful and are now better informed and more inclined to consider GHG accounting within your organisation. If I can help in any way, please feel free to email me at barbara@rbesg.com or book a one-to-one consultation with me online. Thanks a million for watching and best of luck with your sustainability journey.